Well, we've seen negativity build up around the world, and particularly here in Australia, with weakening commodities prices, falling earnings, and perhaps some conflicts flaring up, yet markets are holding near their highs. So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 20th of February 2024, and before I begin, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So reporting season, that's the big news story for the Australian market this week. In fact, it has been for the past 2 weeks. We've seen a fair number of large companies report earnings already. We've seen CSL, we've seen CBA, we've seen Telstra, we've seen BHP today, we've seen Transurban, we've seen quite a few others. But all of those stocks that I just mentioned, all of which are top 20 shares and include the 3 largest companies on our market, actually fell after their earnings results. In fact, the majority of them reported a fair drop in earnings compared to last year. There have been a few in the top 20 that have reported and risen on their results, so I will give that caveat, and Wesfarmers and Goodman being a notable too. But overall, looking at the reports that have come in so far and the market response on the day, they haven't been very good. We've seen earnings drops from CBA, we've seen earnings drops from BHP, the 2 largest companies on our market. And yet that hasn't been enough to shake our market lower. Our market is holding up despite these earnings results, not because of these earnings results. And it is a little bit odd. You do assume, at least in a financial mathematics perspective, and perhaps at a very base level, you assume that the market will move in response to how those companies are performing. But it seems this time around, investors are happy to ignore or forget about earnings in the short term and perhaps look beyond the current earnings season towards 2025, towards 2026, maybe even 2027, when there is expected to be an earnings rebound and interest rates are expected to be much lower than they are now. But I do just want to say, I think you have to have been disappointed with the earnings season so far, and so it is a little bit surprising that prices are holding up as well as they are. I guess one silver lining from this earnings season so far has been the dividends announced, which have largely come in line or slightly greater than expected, including BHP's dividend today, which although was a decline on last year, was much better than expected. So they ended up with a much higher payout ratio of underlying earnings than expected, and I think that demonstrates to the market confidence that they'll resolve these legal issues in Brazil at perhaps less cost than you've read about in the media. Plenty more earnings to come. We've got Rio, we've got Fortescue in the coming days. There's going to be quarterly results from NAB, and there's plenty of other large companies reporting over the next week or so. As always during this time of year, make sure you check a company's reporting calendar before entering a trade or investment. The other thing to mention is the rate cut timetable. At the start of the year, everyone was adamant that we were going to get rate cuts in March, that we'd get 6 or 7 US rate cuts this year, that we'd see 3, maybe 4 Australian rate cuts this year as well. And recently, or in fact really for the past 2 months, the data hasn't been pointing towards that. If anything, the data's been more inflationary than expected, particularly in the US. Their unemployment's lower than expected, their CPI growth is stronger than expected. Other economic data in the US continues to come in strong. And as of now, we've seen everyone go, okay, maybe they won't cut in March, but they'll cut in May. And at the moment, we're now going, well, maybe they won't cut in May, but they'll cut in June. The reality is, if data continues to come in the US, as it has been, those rate cuts will be pushed out into the second half of the year. Now, here in Australia, things are looking a little bit more deflationary. Our absolute level of inflation is still a little bit higher, but our data is weakening at a more rapid pace than that of the US. So we saw a jump in Australian unemployment. Australian CPI growth came in a bit lower than expected. And overall, it's only a few sticky points that are holding up Australian inflation. Those include things like housing costs and cost of financial services, and particularly insurance. So those factors, I think, are causing Australian inflation to look a bit sticky. But overall, I think we're starting to at the moment, we're bringing ours down at a greater rate than the US, where inflation seems to be holding at a fairly high level. Regardless, rate cuts have been pushed out in time, and all this optimism that we saw in November and December, I think, has to be called into question now, particularly in the US. We saw the release of the RBA minutes today, and they really didn't say much at all. No real extrapolation on what they said at the February meeting at the start of the month, and that was basically, we're going to hold here and see what happens. And that's what the minutes told us today as well. We're going to hold here, we're going to see what happens. So didn't really indicate, whether they were becoming more hawkish or more dovish, but going by the data, you have to assume Australia looks slightly more dovish, whereas the US looks slightly more hawkish than the same time a month ago. Finally, I did want to touch on iron ore, and today iron ore's fallen around 4% at the time of writing. So that's a fairly large move, and it comes at the end of the Chinese New Year holiday. And this is often a time of change for Chinese markets, a time where things sort of change trend. You see restocking or destocking, and sometimes it's a time at which you can see markets turn. And I did want to bring this up because usually you would see fairly strong selling in the iron ore miners when iron ore fell 4%, but the iron ore miners actually pushed back up, other than I think maybe BHP on its report, they pushed back up towards the close, despite this big sell-off in iron ore. Now, if you look at a daily chart of iron ore 4% lower, it is going back to the yearly lows. I do worry, or I do sort of, would suggest to investors in the iron ore miners, if this breaks the rough support line here, I believe at roughly 920 yuan per ton, there's a lot of room potentially to the downside for Chinese iron ore. So if you are invested in BHP, Fortescue, Rio, even some of the smaller ones, you do want to be watching this chart at the moment, because there are signs that perhaps Chinese iron ore markets are about to head lower. And if that's the case, these iron ore miners do look fairly expensive up here, even at current iron ore prices. If those iron ore prices are to go lower, I do think that's going to be that's going to lead to a bit of selling in those iron ore miners. Having a quick look at the charts, this is the Australian XJO, the top 200 shares listed in Australia, and we can see that it's basically topped out just below the all-time high resistance, just below 7,700. And we did see some selling early today, but we bought it right back up to the close, which was a bit odd because US futures are fairly lower, or a fair bit lower at the moment. If we do see selling from here, I'd expect to move back towards the trend line, back towards the support level, right around sort of 75.40, something like that. Would not be surprised to see that occur tomorrow if those US futures do play out. The reason is US markets are also up at the all-time high resistance and also showing some signs that they might come back to their trend line. They're stalling out on the S&P 500 at roughly 50-50 index points. If they see further selling, we'd expect to move back towards about 49.60, somewhere around that longer-term uptrend line there. Overall, both Australian and US markets look extremely overbought, but it seems like even negative news isn't enough to trigger selling in these markets. Now, looking historically, when markets have been this ludicrously strong, sometimes it's positive news that triggers the selling. And what I mean by that is, if there's positive news that's released and the market doesn't continue to rise, sometimes that's the harbinger of future selling, or that's the indicator that we're about to see a turn. So that's something to look for, a lack of gains on positive news for Australia or the US. Alright guys, I will end it there for this week. Hopefully you guys enjoyed, hopefully you learnt something. If you did, let us know below. Click like, click subscribe, and we'll see you in the next one.